Good afternoon. Welcome to World Economy. My name is Blyden Ukem. On World Economy today, I will look at some of the details around the world. First, a U.S. Federal Reserve is expected to maintain rates and focus on projection. U.S. stock drops as Trump ramps up Iran rhetorics. Japan exports fall for the first time in 8 months, plus. South Africa inflation holds steady at 2.8% in May. These and many more we'll have on World Economy. Welcome back. First on World Economy, the Federal Reserve is widely expected to leave the federal funds rate unchanged at 4.25% to 4.5% for a fourth consecutive meeting in June 2025, as policymakers take a cautious stance to fully evaluate the economic impact of President Trump's policies, particularly those related to tariffs, immigration, and taxation. This meeting will also see the release of updated economic projections, the first since Trump's April 2nd Liberation Day announcement introducing sweeping new tariffs. So far, incoming U.S. economic data has not indicated any immediate cause for concern. Headline inflation stands at 2.4%, with core inflation at 2.8%. Meanwhile, the unemployment rate has remained steady for 3 consecutive months despite a slowdown in job growth. Markets will be closely watching the Fed's so-called dot plot to see whether policymakers still project 2 rate cuts this year, or if there has been any shift in that outlook. Selling the US. US equities fell on Tuesday as investors closely monitored escalating tensions in the Middle East, with the Israel-Iran conflict entering its fifth day. The S&P 500 lost 0.8%, the Dow dropped 299 points, and the Nasdaq fell 0.9% amid growing fears that the US could become directly involved in the Israel-Iran conflict. President Trump intensified his rhetoric demanding Iran's unconditional surrender and warning of a potential strike against Supreme Leader Khamenei in series of Truth Social posts. At the same time, disappointing US retail sales, which dropped 0.9% in May, signaled a slowing consumer that tariffs may be having a growing impact in the economy. Japan exports fall for first time in 8 months. Japan's export fell 1.7% year-on-year to a 4-month low of 8,134.99 billion yen in May 2025, reversing a 2% gain in April and marking the first decline since last September amid the impact of sweeping US tariffs. Still, the drop was milder than the market consensus of a 3.8% fall. Shipments to the US slumped 11.1%, the second straight monthly drop, due to weaker demand for cars, auto parts, and chip-making machineries. Meanwhile, exports to China shrank 8.8%. In contrast, sales rose to EU 4.9%, Russia 5.2%, and Asian countries 0.1%. Prime Minister Shigeru Ishiba and US President Trump recently agreed to extend trade talks after failing to reach a breakthrough. Tokyo continues to seek an exemption from the 25% US auto tariffs, while Trump doubled duties on steel and aluminum to 50% in early June. And now to UK's inflation rate. The annual inflation rate in the UK edged down to 3.4% in May 2025 from 3.5% in April. The largest downward contribution came from transport prices, reflecting falls in airfares -5%, largely due to timing of Easter and the associated school holidays, as well as falling motor fuel prices. Additionally, the correction of an error in the vehicle excise duty series contributed to the drop. The error affected April's data, but the series has been corrected from May. Further downward pressure came from cost of housing and household services, and mostly owner-occupiers housing costs. Services inflation also slowed to 4.7% from 5.4%. On the other hand, the largest upward contribution came from food and non-alcoholic beverages, namely chocolate, confectionery, and ice cream, and furniture and household goods. And now let's look at the charts indicating UK's inflation rate, the rise and fall in inflation numbers. From May last year, inflation in the UK stood at about 2%, began to rise to 2.2% in July and 2.2% thereabout in August, a slowdown in September last year. By October began to increase up and down movement, and currently, by April rather, had moved to a high of 3.5% and thereabout, dropping slightly to 3.4% in May, indicating a bit of a slight improvement for the pound despite its recent struggle and the economic cost of commodities in the UK being a little stable. In Sweden, the Swedish Riksbank cut its policy rate by 25 basis points to 2% in June, in line with expectations that the country's economic recovery slows and inflation eases. Recent data shows weaker growth and persistently high unemployment, while inflation has aligned with previous forecasts, but is expected to fall slightly below earlier projections due to weaker demand. The red cut aims to stabilize inflation at target and support the economy. The central bank also signaled the possibility of another cut later this year. Domestically, rising real wages offer some support, but the pace of recovery is slower than expected. And now let's look at the world's worst performing economies in 2025. The big question is, which countries are experiencing the sharpest economic contraction and lowest growth in 2025? According to the latest IMF projections, a mix of fragile developing nations and major advanced economies make the list. From conflict-driven collapses to stagnation in Europe, this ranking reveals where economic headwinds are hitting hardest. Multiple observation indicates this data is from the International Monetary Fund IMF. It ranks countries by their expected real GDP growth for 2025, spotlighting those projected to shrink the most. Here's a look at the world's worst performing economies in 2025. Conflict-ridden economies take the hardest hit. South Sudan tops the list with a growth rate of negative 4.31%, driven by plunging oil revenues and political turmoil. Similarly, Equatorial Guinea and Venezuela show sharp declines amid structural economic challenges. Let's look at the list and reliance on fossil fuels. In 2022, Venezuela was the world's 23rd largest oil producer, despite US sanctions. Other conflict-affiliated or affected or fragile states like Iraq, Yemen, and Haiti are also experiencing negative growth due to instability, humanitarian crisis. Among the 20 worst performers are several advanced European economies. The IMF data shows Austria a negative 0.26%, Germany a negative 0.05%, and Italy a 0.44% gain are all projected to stagnate or grow marginally. High inflation, sluggish productivity, and aging population contribute to weak growth in these regions. Japan and Switzerland also make the list, despite their developed status, signaling broader challenges in the global north. In Africa, South Africa retail sales jumped. South Africa's retail sales rose sharply by 5.1% year-on-year in April 2025, following a downwardly revised 1.2% increase in March. This marked the strongest growth since January, driven primarily by higher sales at general dealers and retailers of textiles, clothing, footwear, and leather goods. On a seasonally adjusted monthly basis, retail sales rebounded by 0.9% in April, ending 2 consecutive months of decline. Still in South Africa as inflation holds steady. South Africa's inflation rate held steady at 2.8% in May 2025, matching April's 5-year low. Faster price increases for food and non-alcoholic beverages, housing and utilities, and clothing and footwear were offset by slower inflation in alcoholic beverages and tobacco, restaurants and accommodation services, and personal care and miscellaneous services. In contrast, transport prices declined sharply. On a monthly basis, the consumer price index increased 0.2%, slightly below the 0.3% rise recorded in April, marking the lowest monthly increase in 5 months. And meanwhile, the annual core inflation held steady at 3% in May, remaining its lowest reading since July 2021. Looking at the chart we have indicating South Africa's inflation, it has shown how inflation has decreased in South Africa from last year's high at 5.2%, dropping consistently at a low of 2.8% in October last year before a slight increase to 3.2% in February and recent decline and recent increase, indicating the strength of the South African rand and the cost of commodities not being quite high. In Namibia, Namibia maintains key policy rates. Namibia's central bank held its key lending rate steady at 6.75% during its June meeting, citing the need to preserve the currency peg between the Namibian dollar and the South African rand, while supporting domestic economic growth. Policymakers noted that inflation remained well contained, easing slightly to a 4-month low of 3.5% in May 2025. At the same time, economic activities expanded in the first 4 months of 2025, though at a slower pace than during the same period last year. Full-year real GDP growth is projected at 3.8%, a slight improvement from 3.7% in 2024. And now we'll go on a quick break, and when we're back, world economy continues, looking at the different markets and the postulations in it. Don't go anywhere. Welcome back. It is World Economy, and my name is Rhetoric. We begin looking at the markets now as CTF prices advance for city session. European natural gas futures climbed to a €40 per megawatt hour, marking a 6th-straight gain at the highest level since early April amid rising tensions between Israel and Iran. The traders are increasingly concerned about potential disruption to vessel traffic through the Strait of Hormuz, a critical route for global energy trade. About 20% of the world's LNG passes through the strait, and fears are growing that Iran could target tankers in the area. Qatar, a major LNG exporter, has asked some vessels to wait outside the strait until they are ready to load, adding to market nervousness. While southbound ships have passed without delays, several northbound tankers remain on standby. Oil prices have also risen in response to the heightened risks to trade routes. At the same time, Europe is facing hotter than usual weather, which is driving up demand for natural gas used in air conditioning. A forecast suggests above average temperatures will continue, adding further pressure to gas prices. First, let's go to the market looking at the energy market, afterwards the metals and agricultural market. The energy market this morning indicates the price of crude oil, US crude at 75 US dollars per barrel, upward by 0.31 points, and Brent, Nigeria's price benchmark at 76 US dollars per barrel, gaining 0.245 points. And now to the metal markets. A metal market indicates the price of gold at 3,387 US dollars per ounce, upward by 0.13 points, and silver price falling just slightly and 0.037 point this morning at 37 US dollars per ounce. Copper price gaining 1% this morning, and steel price gaining 6 a point this morning at 2,953 Chinese yuan per ton, the price of steel. And now to agricultural markets. Agricultural market indicates the price of soybeans at $1,074 US dollars per bushel, upward by 0.32 points, wheat price gaining 3 points this morning, lumber falling 2 points, and palm oil price gaining 19 points this morning at a price level of 4,115 Malaysian ringgit per ton. Still on world economy, Asia is facing demographic adversity. Countries in Asia have historically seen some of the highest fertility rates worldwide. In 1970, South Korea's rate was more than double the replacement threshold. Today, it is far below the level, meaning that each coming generation will be approximately half as large as the one before it. Similarly, major nations such as China and India have seen dramatic falls to rates which are currently also below the replacement level. Various reasons have been proposed for this vast decline in fertility, such as the availability of contraception and the increase of women in the workplace. Recent studies have shown that sperm counts are declining worldwide, and this seems a fundamental factor in this fall in rates. Due to this, China and Japan, South Korea and Thailand, which are all predicted to face depopulation from now to 2050, will have not just smaller, but more elderly demographics. This top-heavy generational pyramid will naturally put great strain on healthcare and old age support systems, accentuated by the shrinking working age population. Looking at the table we have before us and the rankings are from 1970 and how the change happened in 2000 and how it even changed in 0.7%. You can see it changed in 2024. You can see Korea Republic, a population increase of 4.5% in 1970, slowed down to 1.5% in 2000, and 2024, 0.7%. Asia Pacific GDP is over twice that of the Americas, 3 times that of Europe, and 8 times Africa. Asia Pacific countries accounted for over 70.1% of global GDP growth over the decade to 2024, with China alone accounting for 31.1%. GDP per capita is growing much faster in Asia than in other regions. The Asian population is greater than that of Africa, the Americas, and Europe combined. Life expectancy and age dependency levels are similar to those of Europe and the Americas, the higher and lower respectively than those seen in Africa. Governance is counted as within the A to C bands and therefore reasonable. In 47% of Asian countries, but the Asia Pacific total includes China, Russia, Bangladesh, and other countries with the lowest e-governance rating, signifying a level of untrustworthiness that should alarm investors of all kinds. Well, as we set to close, let's look at the FX update this morning, or this afternoon rather. Our top currency gainers are South Korean won, a 0.46%, Australian dollar, a 0.35%, Polish zloty, 0.31%, the euro, 0.2%, and British pound, 0.16%, and Japanese yen, 0.2%. The biggest losers this afternoon in the currency market are dollar index, a negative 0.15%. And quickly, let's go to the market, the Euro USD market, and afterwards the USD, African currencies, and a cryptocurrency market. A Euro USD market. The Euro USD market indicates a price level of 1.15 point mark for US dollar, 1.15 US dollar to the euro. A slight gain in that direction, 0.29 percentage gain for the euro against the US dollar, and the pound 0.21 percentage gain over the US dollar at a price level of 1.34 point mark. Similarly, let's look at the US dollar against African currency. The US dollar against African currencies. A US dollar against the Nigerian naira price level stands at 1,547 naira to the dollar. And the US dollar against the South African rand, 18 rand equaling $1 US, again for the US dollar. And Zambian kwacha at 23.9 kwacha to the US dollar, the dollar falling against the kwacha by a negative 2.45%. The Egyptian pound gaining or losing to the dollar gaining 0.81% over the Egyptian pound at 50 a pound to the US dollar. And we close with the cryptocurrency markets. The cryptocurrency market this morning. A Bitcoin price stands at 104,746 US dollars, gaining 141 points after a recent decline. Ether at 2,506 US dollar rather, falling by 4.99 points. Binance dropping 4.1 points. Cardano, Solana, Ripples also downward, and that of mixed fortune for the crypto market. It seems to be on a negative direction. It's a story of world economy, the markets, and the postulation that comes with it. And here we draw the curtain in today's edition of A World Economy. Thank you for being a part of it. My name is Vlad Lukin. Thank you for watching.